Hello and welcome to Looking at the Markets with David Modell, trading the Gravestone Doji candlestick. It is not that complicated, but I just want you to be aware. I don't want you to trade something just because I told you about it. I want you to make your own decisions, and don't just short or sell just because you see a Gravestone Doji candlestick. Okay, you want to use your common sense and use small position sizes. Always respect your stop losses and play it safe. All right, safety first, folks. But first, what is the Gravestone Doji? It is a candle, and it looks like this basically. It's a doji because the body is basically almost non-existent. It's flat. It's a flat body, meaning for that period. And this applies to any time frame of candlestick. All right, this could be a 1 minute candlestick, or 5 minute, or 1 hour, or 1 day, whatever it is. Okay, it's still a Gravestone Doji regardless of the time frame here. Okay. So, when you have a flat body for the candle where it opened and closed at around the same price, all right, but then on the other hand, look at the wick. You only have an upper wick, no lower wick, okay, so that means that the price action started here, it opened here, and then went all the way up here, and so the market tried to push the price up, but then it fell down, down, down. Totally, it got up here, but then it totally failed. All right, and it came right back and closed right at about where it opened. And so you had buyers coming in, and then the sellers came in and pushed it right back down. So this up move pretty much failed. Okay, granted, it did not close any lower than it opened, but still, this is considered a failed attempt at an up move. And when it happens at the end of an uptrend in candles, so you got uptrend, candles up, 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 and then you got your Gravestone Doji candle, okay? And this says if you see this candle, especially at the end of an uptrend, okay, it's not as meaningful when it's in, if there's a downtrend or it's just kind of chopping sideways. Mainly this is useful, or the most useful, at least in my opinion, at the end of an uptrend. Okay, so if you see this pattern here, you might consider selling Gravestone Doji. Okay, it's possibly bad news. Now, don't follow this exactly. This does not work 100% of the time. Okay, I want you to use other indicators, use your common sense, make your own, make your own decisions. All right. So just because I'm saying sell doesn't mean you should do it. And some people actually short here. They take a short position. But that's risky, okay? What you can do if you're a long-only kind of trader, which is a safer way to go, if you have a nice profit here, you can take profits here, or start taking profits here. Not a bad idea, because this signals a failed up move, and it could be exhaustion after a big uptrend, okay? So don't follow this exactly. Use other rules, use other indicators, use your common sense. But if you wanted to trade it, let's say you wanted to short it, okay? One way to play it is just to sell your long position, take your profits. But what if you wanted to short it? You could. Be careful, though. Shorting is very risky. It's not for most people. But if you want to try it, that almost non-existent body there of that Gravestone Doji at the end of an uptrend, that could be called the trigger line, okay? And so you can draw a horizontal line here and then wait until you get a red candle that closes below that trigger line there, okay? You're drawing that trigger line right at that body, which almost doesn't even exist here almost, okay? When it clearly closes below it and it's a red candle, that could be your short signal. And if you wanted to be safe, which I recommend, you can use a stop loss, and you can place it, just draw a horizontal line at approximately the top of that upper wick there of that Gravestone Doji, okay? And then you can hopefully follow it as it goes down, and if it doesn't, then at least you know where your stop loss is, okay? And if you want to make it a trailing stop, you can do that. You can take profits along the way. And so, about equidistant, whatever this distance is, you can draw another horizontal line here, that same distance, and then another horizontal line here, the same distance, and you can trail your stop loss manually that way. And so if you took a short position after this candle closed below that trigger line, okay, now you put your stop loss here if you want to, okay, And then if it breaks below the next take profit, okay, then you could take this stop loss line and move it down to here. So now you moved everything down a notch, so to speak, okay, and so now your next profit target is over here, and so your stop loss is here now, and so on. And so you're trailing the stop loss downward. You're trailing your take profit and your stop loss, so to speak, okay. That's one way to possibly do it. This is complex though. This is not for most people, so be careful if you're going to short. If you're going to go long only, then you could always just take profits here, and there's nothing wrong with that, okay, or take partial profits. Start to think about, is this going to be the turnaround point? All right, so there's your Gravestone Doji, and a couple different ways to look at it and play it. All right, I hope this was helpful to you. If you want more help with trading or investing, I do offer coaching. You can email me for the coaching at davidmodell@gmail.com. If you like this video, hey, why not do me a favor and give it a thumbs up right now? That encourages me to make more videos like this. And also subscribe to my channel if you haven't done that already. And hit that notification bell so you'll be notified whenever I put out new videos like this one. All right, thanks a lot. I appreciate it. I'll talk to you again soon.